All right, what's up, everybody? Let me know if this microphone is working, because I think I'm getting two of them mixed up. Anyway, if you can hear us, and if we are streaming in 1080p, also if you can rewind the stream, just go ahead and give a thumbs up in the chat, and we will get started here momentarily. We're going to be talking about a lot of the investment banks that have reported earnings. So we'll get started here in just a moment. All right, everybody, I think we can go ahead and get started here. So good evening and welcome back to Walks and Wall Street. Today, let's see what today is. It is Tuesday, April 16th, 2024, and it's currently 9:03 p.m. Eastern Time right here in New York City. Now, we are officially in the swing of things throughout earnings season yet again. And as we know, earnings season usually kicks off with all of the major financial institutions reporting earnings. So we heard from JP Chase. Today we heard from Morgan Stanley. Yesterday we heard from Goldman Sachs, Bank of America, and the like. And we're seeing this common trend amongst all of them. Now, I'd say earnings were pretty good. To be fair, I think they were above expectations, quite obviously, for a lot of them. But there were also some sore spots, and I think it's going to be appropriate tonight to talk about the good, the bad, and the ugly of all of these corporate earnings reports. But I want to direct your attention and kind of refresh your memory to something we've been talking about over the course of the past 6 months. Now, oftentimes we can use price action in and of themselves as leading economic indicators. And we've been talking about not only the investment banking business, so the big investment banking giants like Goldman Sachs, Morgan Stanley, JP Chase, Bank of America, and so on, but we've also been talking about private equity, right? We've been talking about the big giants like KKR, Apollo, and Blackstone, and how the vast majority of these companies have been trading really, really well, breaking 52-week highs and all-time record highs. And one of the things that we were alluding to is that there is going to be a major, major comeback in deal-making on Wall Street from the investment banking side, IPOs, M&A, and the like. And it seems that's exactly what is playing out. We've had a great report come in from JP Chase, investment banking activity up in a major way. Yesterday, which I think was the most encouraging, we heard from Goldman Sachs, a total blowout earnings call, which I was able to listen to today. Obviously, yesterday I was traveling back and forth between Miami and New York. But awesome results. Goldman Sachs absolutely blowing it out of the water. Earnings per share coming in at $11.58. Analysts were expecting $8.56 worth of EPS. Now, profitability was up 28% at Goldman Sachs, $4.13 billion. Now, the most important thing is this. investment banking fees were up 32% to $2.08 billion. So we're starting to kind of see full circle here. And this is what's really, really important. And I'm glad that we're kind of seeing this, because this is, if you're a portfolio manager or you're managing money, there is kind of like a process, and you can kind of use leading economic indicators to make high probability bets. And that's really what investing is all about. You can use different leading economic indicators to try to formulate high probability bets on what may happen in the future. And, you know, since I'm at my computer, let me do this. Give me a second. I'm going to go to the Goldman Sachs Investor Relations page, and I'm going to put in the chat the Q1 2024 earnings presentation. And if you have time, I mean, no rush. If you have time, take a look at it. And I would also do the same thing for Morgan Stanley and Bank of America. If you just go to the websites and you go to the Investor Relations page, you can download the earnings deck, and you can, you know, see these projections and kind of take a look at it. Now, on another note, if you go over to Bank of America, give me 1 second here while my computer loads. Now, Bank of America, their chief of finance, they said, and I quote, "We are quote unquote struck by just the sheer amount of cash on the sidelines at this point." And this is another thing we've been talking about. If you go to the St. Louis Federal Reserve website, or the St. Louis Fed website, and you look at cash on the sidelines in money markets, it's about $6.5 trillion now. So I think this is good news. It wasn't all good news, though, in earnings for financials. We're going to have a couple more coming up. I'd say the biggest sore spot so far from bank earnings is CRE debt, commercial real estate, and also consumer debt, right? Credit card delinquencies are starting to ramp again. We'll talk about that. Last but not least, let me just go here. On Thursday, my friends, I did send out our latest issue of the Behind the Street newsletter, where we covered a lot. We talked about commodities, we talked about inflation. So if you would like to receive all of our equity research every other Thursday, right as the market is closing, just go ahead and scan the QR code on your screen, or type !news, NEWS, in the chat, and it's going to bring you to our Substack. We did a deep dive in the inflation report, which was egregious. We'll talk about that again today, because we heard from Fed Chair Jerome Powell. And we also talked about commodities, crude oil, metals, and Bitcoin. Commodities are doing really well. What does this mean for the market? You could find out by checking out our Substack. So friends, let me go ahead and close up my laptop. I'll say hello to everybody in the chat, and let's get this stream started. Thank you all for joining, and I'm really happy to be back in New York. Allow me one moment. All right, we have a lot of Fed talk to do today, because we did hear from Fed Chair Jerome Powell, our good buddy, yet again, stating the obvious. Patient Lobsters here, what's going on? Welcome. We are currently standing outside of the beautiful 432 Park Avenue, right here in Midtown East. Pretty exciting stuff. Now, I want to point out this building. You guys have seen it a million times, but we do have some breaking news. Right adjacent from us, this is 425 Park Avenue. Now, breaking news today, hot off the press, Citadel Securities is now officially going to move forward with building their 62-story megatall office tower at 350 Park Avenue. They've officially released the renderings, so check it out. If you guys go to Google Images or, wherever Google on the internet, 350 Park. The thing is amazing. Citadel, obviously Ken Griffin is partnering with Vornado, so Steve Roth, and they're going to build an amazing super tall just down the street to rival being done in New York City, just as everybody is counting the city out. I think this is going to scream back in a major way. Check the logic. What's up? Gary Carpenter. Noah, good to see you as always. Trust you're doing well. Let's cross Park Avenue and take a walk directly down Park because it's a beautiful day, beautiful night. I think it's about 65 degrees. And we'll head towards Grand Central Station. Love the beaches here. Good to see you. Solo 401s is enough people to fill it. Yeah, apparently there's going to be 8,000 Citadel employees that are going to be moving to New York City. And this is all a part of that major restructuring program at Citadel. They have moved away from Chicago, Illinois. They have made their main headquarters in Miami, Florida. And that's also going to benefit New York City too, because a lot of the employees are moving to New York and a lot of the employees are moving to Miami. So fantastic stuff. Dow Jones, good to see you. Road Dog, always a pleasure. Stan says Trump media and Tesla are leading the fall. Well, Trump media is irrelevant, and I'm not saying that in a political way. It's not a real company. It's nonsense. It does like $3 million worth of revenue. So I wouldn't even bother paying attention to that because it's just nonsense, in my view anyway. But now if it starts to do numbers and revenue starts to ramp up and it starts to produce earnings, then maybe I'll pay attention to it. But this is just, in my view, right, and I've been very outspoken against a lot of these SPAC deals. It's just another cash plunge, money grab, just like all the other SPACs were. In my opinion, maybe I'm wrong, I don't know, but that's what I think. Hey, Sam Oliver. This is Tom here in upstate New York. Auto dealers are building out big time. I watch them as a leading indicator. Oh, wow. Really interesting. So what do you mean by that? Maybe you can just type a little bit more in the chat. You mean they're building more dealerships? Is that kind of what you're referring to? That's really interesting. I would have never thought that in a million years, honestly, because, upstate New York in general, right, and this is going to be a gross generalization, just a forewarning, very economically depressed compared to downstate, right, compared to, I should say, the tri-state area, New York City, Nassau, Suffolk County, things like that. So that's really actually very encouraging to hear. We need economic activity in upstate, like Albany, Syracuse, Rochester, and Buffalo. Daryl, what's up? Good to see you. Speaking of Chicago, I know Brad says don't badmouth my Trump stock, Tom. I'm only down $50 a share. No, I get it. Yeah, a lot of people have just been buying it for like a meme. But here's the thing. I totally understand and I get it. But look, maybe I just have a personal vendetta against SPAC structures. Who knows? Anyway, Tug Carter, always a pleasure to have you here. Yeah, let's go to Grand Central Station. Speaking of 270 Park Avenue, you can see it in the distance here. But I guess we'll jump right into this, everybody. Obviously, we are now into the thick of earnings season yet again. We'll wait for the light. I'm feeling lazy tonight. And I think overall things have been rather well. There's been some sore spots, but overall, if I could sum it up in maybe a few kind of sentences or few words, is that investment banking activity is really coming back in a major way, as expected, right? 2021, mainly throughout 2022, were really depressed for deal making on Wall Street and deal activity in general, for obvious reasons, right? Interest rates went up in a major way, which essentially turned off the IPO market. like there were no deals being done, there's a really good website you can go to for a better visualization of this. It's called slickcharts.com. And you can navigate the site and you can look at historical IPOs throughout history. And 2022 was one of the worst years for IPOs on record after that banner year on Wall Street for new issues of both IPOs and SPACs. We all know why, right? Because there was massive amounts of stimulus floating around in the economy. We were printing a bunch of money from the Fed, and interest rates were pretty much at bottom of the barrel levels, which caused a speculative mania. But once you had a complete change in that, and once we went from QE, or quantitative easing, to quantitative tightening, essentially turned the party off, right? Party's over. Now that a lot of that speculative excess has worked its way through the market, you're going to start to see a material pickup in deal flow on the street, which I think is really good. And you don't have to take my word for it. If you go ahead and listen in on the earnings calls of the likes of Goldman Sachs, Bank of America, JP Morgan Chase, almost all of the heads or the CEOs of these major banks are saying the same thing. David Solomon came on the call and said that, these troughs or these depressions in deal flow or in investment banking and M&A, they don't last forever, right? You have bull markets, you have bear markets and the like. And you're starting to see companies more comfortable with doing deals again, which is very, very positive for the markets and very, very positive for the US, the United States in general. So windfall profits, record profits this quarter at Goldman Sachs, and they posted the best numbers since 2021 in their investment banking division. Hey, Robert is here. Says, hey, Tom and friends. Good to see you as always, Robert. Welcome. We're now outside of my favorite building here. This is the Seagram building. Victor C, what's going on? Stance is, but considering inflation, perhaps a put of 125 might be okay. Paul, what's up? Stance is on oil. Interesting. Yeah, I think the main thing, in my view, and I want to know what you guys think as we're looking at the beautiful 432 Park Avenue building, I really do think that oil right now is signaling that all of this trouble in the Middle East is a little bit overblown and it's going to come to a conclusion, which is good. Because with all of these rockets, flying around, Iran launching that massive assault on Israel, you would think that would have spooked the markets a little bit more. Now, it's spooking the markets in terms of the media sensationalism, right? And getting everybody all riled up and scaring everybody. And it's a very real threat. But if you honestly look at the facts, the Iron Dome essentially took care of all the threats. I don't think there was any material damage at all. And the markets are kind of telling us that, right? Crude really didn't even move at all. If you look at crude futures right now, it's about $85 a barrel. I think if we hover around here, that to me is the market telling us that things are going to de-escalate. Hopefully, right? And that would be very good. I don't think anybody wants anything to escalate over there. Wendy England says gasoline is back up to $2.10 a liter here. Yeah, when I was down in Florida, you had, I don't know, I think it was almost $4. Something like that. Patient Lobster says, I think Israel will respond soon. the market will react once that happens. Yeah, we'll see. I mean, you would definitely know more about it than I would, right? You, I mean, you live there, so you know a lot more about it than me. Patient Lobster says all of our local media here says it's going to escalate. Mark's joining us. What's going on, Mark? As we walk down Park Avenue. Now, speaking of private equity giants, here you have Blackstone. Yeah, Solo 401 says gas is $3.26 in Rhode Island. Jumped 10 cents overnight. Stephanie Cerns is just under $6 a gallon of gas here in California. That's insane. Well, California always has very, very elevated gas prices. Peter says you will see $90 oil by the summer driving season. Let's see. I mean, you know, crude is trading above the 50. It is in gear. Commodities are ripping in general, so we'll see. Jimmy B says gas in Bergen County, New Jersey is $3.30. I think that's going to be your biggest tell. I think crude oil will be the biggest tell here. If you have the equity market kind of rebounding here, with crude, you know, kind of staying in this $80 to $90 range, without it really going off on one and breaking out to 100, then I think this market will recover. And that's kind of what I'm expecting. So we'll see. We'll see. This is the Waldorf Astoria. The brand new residences. Oh yeah, Mark, that was our Wynwood. Our Wynwood walk. I love Wynwood. It's an amazing, amazing place. If anybody is unfamiliar with Wynwood, check it out. It's a very cool up-and-coming neighborhood in the one and only Miami, Florida. It's an awesome place. Look at that. You have one Vanderbilt, the spire, and you have the main spire of 270 Park. And just up the block, you're going to have 350 Park, which is the new Citadel skyscraper, which was just announced today that they're going to be moving forward on plans with that. It's going to be a co-led project by Ken Griffin and Vernado. Look at that. Give me 1 second. All right, guys, I will be right back. I have to take this call. So I'm gonna end the stream. I gotta take this call for 2 seconds and then I'll jump right back on. It's just a work emergency. I will be right back in 3 minutes.